Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to talk about Mastercard because Mastercard reported their Q4 earnings of 2020 today before the market opening, and I will take a look with you into these numbers and then also explain what I will do with my position in my portfolio, because right now Mastercard is a smaller position in my portfolio with 3.6% of the whole portfolio. Here you see the pie of my whole real money North American portfolio. And if you're new to my channel, you find deeper analysis to all of these companies on my playlist. I put it here up on the screen. Feel free to check this out. In these videos, I go into the business model, the management, the financial numbers, calculate the intrinsic value, and tell you when and why I bought these great companies. And the same also I did with Mastercard, and so you find a deeper analysis on my channel as I said, for every of these businesses. And so today before market opening, they published the Q4 earnings, and just take a look into these numbers. And therefore we go to Zacks, a very good website for all the financial numbers of almost every company. Mastercard came out with quarterly earnings of $1.64 per share, beating the Zacks consensus estimate of $1.51 per share. This compares to earnings of $1.96 per share a year ago. This quarterly report represents an earnings surprise of 8.61%. Mastercard revenues of $4.12 billion for the quarter ended December 2020 surpasses the Zacks consensus estimate by 3.23%. This compares to year-ago revenues of $4.41 billion. So overall, they beat the estimates of the analysts and of the Zacks consensus. But of course, there is a big decline in the earnings and also in the revenue compared to the last year. And just to illustrate that, I go here to macrotrends.net, also a very, very good website. And here we have the earnings per share over the last 3 years, quarter by quarter. And we see in the first 3 quarters of 2020, it declined a lot. Here is the fourth quarter is not in that already, but we see how much the earnings per share went down, and of course all because of the pandemic situation and the whole economic problems and the less spending and the less using of credit cards overall. And so, of course, Mastercard is also hidden by this pandemic situation, hard hidden by the pandemic situation, but they are still profitable and they are still high profitable. And this is key for me as a long-term value investor. I look for companies which are profitable and even profitable in the worst times. And for sure, when we look over the year 2020, this was really a very, very difficult year for the whole economy, and so also for Mastercard. And so today, in an overall very positive market, Mastercard right now gained 3.67% to $327 per share. And we see here on this chart for the last 6 months, since the start of 2021, Mastercard loses around 8% to now $327. The question is what to do with this position under these circumstances, because now I have a position of 9 shares in my portfolio with a purchase price an average of $260. I was able to buy these shares here in 2020, mid-2020. Right now I sit on gains of 25% or $605. And so the question is what to do with that. If I calculate the intrinsic value, and therefore I took their earnings for 2019, the last normal year, then I come to an intrinsic value to around $260. I think it makes sense if you calculate the intrinsic value for companies like Mastercard, if you take the last normal year, because under normal circumstances, and hopefully we come to normal circumstances soon, they will come back to the old earnings and of course even rise over that. And so for me, it makes sense to take the numbers for 2019 for the calculation. And then I come to intrinsic value of around $260, which means right now for me, Mastercard is overvalued quite a bit, but not enough to think about to sell Mastercard. And so I will stick with my position. Of course, if this overvaluation gets bigger, maybe to 50 or 60% to the intrinsic value, then it would be time to sell for me. But right now, I just have a great business here for a price a little bit over the intrinsic value, but not that much. And so I just will stick with it. And so hopefully it will grow over time and just compound over time. And that's the goal, just to have great businesses for fair prices and then just let the time do the rest for you. And so we will see what happens here. Right now, it's just time to sit and wait and let Mastercard work for me. So that's it for today. If you liked the video, please give me a big thumbs up, subscribe to the channel and ring the notification bell. And then we will see you next time with another video about another stock. See you then. Take care. Bye bye.